Hello and good day. This is the daily analysis of the S&P 500, Nasdaq, and Dow Jones indices for February 18th. As predicted, the price moved downward, and after collecting liquidity on the sell side, it returned inside the previous candle.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Previous day's candle closed higher, indicating a bullish bias for today, and the price can reach the distal edge of the fair value gap area. The gap at the 6,116 level can continue its upward trend, and specifically if there is momentum and a close above the FVG area, it could be accompanied by positive momentum in the coming days as well. However, if it enters the fair value gap area and if it is accompanied by selling pressure and closes within the range of the doji candle at the 6,883 level, it could indicate a bearish bias in the market and may move with increased selling pressure in the coming days. Now, let's analyze the 4-hour time frame of the S&P 500 symbol. We can see the price movement, which, as we predicted, moved downward. Liquidity was collected on the sell side, and it was expected that with increased selling pressure, the range would become a rejection block. And after that, it would move upward from this range. However, there wasn't enough momentum for a bearish move and to reach the rejection and lock range. And ultimately, it moved toward the target we had identified, as well as the buy-side liquidity and the fair value gap range. By examining the multi-RSITF lab indicator, we can see that it is in a bullish trend. If it manages to enter the high potential zone at level 78 and above, it indicates the continuation of the trend. There is a bullish trend in the market. However, if it enters the overbought zone and a negative divergence is identified in this area, this shift could potentially indicate the definitive conclusion of the current bullish trend and the subsequent emergence of a bearish trend within the broader market. By carefully analyzing the VIX index, we can clearly see that this specific index is currently consistently trending in a downward direction. Furthermore, by examining its detailed chart, we observe that it is exhibiting a clear and steady decline, and could realistically drop all the way down to the 17.740 range, before eventually beginning to trend upward once again. It could continue its upward movement. This index reflects the state of fear or confidence within the S&P 500 market. As the new day begins, we see that it started with a gap, which could be accompanied by more downward pressure, and after that it may move upward again. When this index decreases, the S&P 500 moves upward, and when this index increases, the S&P 500 can, after reaching the breaker block area, it may enter a downward phase, according to the 1-hour time frame analysis of the symbol. S&P 500. Price movement. We can see that after a swing failure pattern, it reacted to the order block area and was accompanied by a bullish displacement, which, with the multi-RSI indicator, we can observe in the 1-hour time frame. It has entered a high potential area, which indicates the continuation of the bullish trend in the market. The levels where the price might react are the distal edge of the line, the fair value gap area at level 6,907. With the increase in buying pressure in the market, reaching the breaker block area is likely, and if an identification of a trend reversal occurs, a bullish move and a break of the key level or a change of character, we can use this opportunity to enter a sell position. Place the stop loss behind the area, targeting the swing low or the swing failure area. There is a pattern where the price could re-enter this area, and after that, we need to update our analysis. As currently, the outlook for the S&P 500 market is bearish. However, with the price increase, it could once again experience a correction downward. With the market analysis on the 15-minute time frame, S&P 500 using the ICT kill zone indicator, TFLab. The price moved downward as predicted, and with the start of the New York session, the price, after collecting liquidity on the sell side and a stop hunt, it moved upward, which is expected, to collect liquidity on the buy side. And by examining the multi-RSI indicator, we can see the bullish price movement, which is further confirmed by the trend lines. However, if we identify a negative divergence on the multi-RSI indicator, it could indicate the end of the bullish trend and the start of a bearish trend, which we can use as an opportunity to enter a sell position. Or the start of the trend could happen during the New York session, meaning the price moves upward, enters the fair value gap, or the broker block zone, and then gets rejected from this area and targets lower prices. By analyzing the daily time frame of the Nasdaq symbol, we can see that the price movement is correlated with the S&P 500, and the target direction is the same movement currently. An upward price increase. And if it reaches the 24,990 level and collects the buy-side liquidity, it could re-enter again. If a doji closes at the 24,930 level, it could indicate bearish sentiment in the market and target lower prices for the next day. However, if it closes above the fair value gap area and is accompanied by bullish displacement, it could target higher prices the next day in order to collect liquidity on the buy side. With the 4-hour time frame analysis of the Nasdaq symbol, we can see that the price moved downward as we had predicted. It entered the order block area and then, with an aggressive move, headed upward. It continued its bullish trend. By examining the SMT and looking at Nasdaq and S&P500, we see that Nasdaq still hasn't managed to break the previous swing high. But in the S&P 500, this has happened, and it has recorded a higher high, which serves as a confirmation for a bearish move in the market. If Nasdaq manages to move upward and enter the unicorn zone at the level of strong resistance in the bullish trend, and after a break in market structure shift, we can enter a sell position. We should place the stop loss behind the swing, targeting the swing low. Or if momentum in the market increases and we see the formation of impulsive and full body candles, it would indicate the continuation of the trend. There is profit in the market, and liquidity can attract the price towards itself and target higher levels. Set it. With the analysis of the 1-hour time frame of the asset, we can see the price movement of Nasdaq, which is in an uptrend. By examining the multi-RSI indicator, we observe that Nasdaq has also entered a potential zone, and the RSI with a 14 period is above the 50 level, while the 42 period RSI has also stabilized above its own 50 level, which indicates the continuation of the bullish trend in the market. If they continue this bullish trend and maintain positive momentum, they can move up to the order block area at the 25,256 level. However, if they lack sufficient momentum and we identify weakness in the uptrend, after liquidity is collected towards the buy side or entering the 50% level of the FVG or unicorn zone, in this section we can look for a sell position in the market, with a target of liquidity towards the sell side and the order block area at the 24,550 level, which, as we see from fundamental analysis, which close to the start of Tuesday and Wednesday, was in a weak state and had become more risk-averse. By analyzing the stock market, we see that major American stocks have a negative sentiment. Even Nvidia, which is generating such good profits, still its trend is weak, and even Microsoft has seen about a 28% drop in its price. We can observe this, and it is approaching its price floor around 20 to 25. Alongside these stocks, Apple, Meta, and even Amazon also face risks in the field of artificial intelligence, as they have spent a lot to equip their AI capabilities. The market's perspective is whether these companies have delivered suitable results or not. By examining sentiment and company data, we see that they have not achieved satisfactory outcomes from the expenses they've incurred. However, relative to their current prices, they are still not considered valuable and could target even lower price levels, especially since their price-to-earnings ratios are above the historical average of the S&P 500. They are comparing. There is a risk present in the market. This is causing shareholders and investors to become hesitant, which could further contribute to a downward trend and lead to prices moving to lower levels. Currently, we also see that the price has lost its momentum and has reacted to a rejection zone. If its momentum decreases, it could move downward and enter an FWG zone. it could collect liquidity towards the sell side. If it collects liquidity from the swing low at level 24,607 and then closes back within the range again, this could be the basis for a trading strategy for a profitable move in the market, so that it can collect liquidity towards the buy side. And it balances these internal market imbalances in a simple way. By analyzing the 15-minute time frame of a symbol, we see that the price had an accumulation move during the Asian session. In the London session, it made an aggressive move upward. If the price moves in a downward direction, we can observe the liquidity gap zones left over from the London or Asian sessions. It is within these particular areas that the price could potentially enter, only to be subsequently accompanied by a strong bullish move during the upcoming New York trading session. However, if the downward momentum increases and the price faces more selling pressure, it could move down toward lower price levels. It could target a fair value gap area and an order block area. Here at the levels of 24,534 and in the 24,391 zone, these could be the price's downside movement targets. With the daily time frame analysis of the Dow Jones symbol, we can see the Dow Jones moving upward as predicted, and an SMT divergence is forming with the Nasdaq and S&P symbols, where in the Nasdaq and S&P500, they have formed a lower low. But in the Dow Jones, a higher low is being formed. This SMT divergence could indicate a bullish market movement, pushing the price upward. It may continue its movement. If the Dow Jones stays above its fair value gap area at the 49,911 level, with the bullish momentum it has, it could target its all-time high in the coming days. With the 4-hour time frame analysis of the Dow Jones symbol, we can see the price movement, which, as we predicted, moved downward. It entered the 50% level of the rejection block, and after that, it started moving upward from this area to collect the buy-side liquidity. And the first resistance level we can consider for the price is the 50% Fibonacci level. And if it is identified as a bullish trend, it could enter a distribution phase. However, if it moves upward, it can enter the order block zone. In this section, if it is identified as a bullish trend, we can use this opportunity to enter a sell position targeting the swing low in the market. But if the price is accompanied by positive momentum and the candles form ERC and full body patterns, it indicates positive buying sentiment in the market, which can push the price toward higher levels. With the 1-hour time frame analysis of the Dow Jones symbol, we can see the price movement, which, as we predicted, entered the overlap zone of a CP or continuation pattern. It was blocked by rejection. There was a reaction to this zone, and after that, our signal was confirmed as the price closed. In the previous candles and the limited range, we could have considered it as confirmation for entering a buy position. We could enter the trade, place the stop loss behind the swing or behind the rejection block zone, aiming for the swing high and liquidity target. Let's take a look at the buy side with analysis on this 15-minute time frame of the symbol. Dow Jones, we can see the aggressive price movement, which is moving sharply upward. This could be due to a move in New York it could be accompanied by a bearish distribution and target lower prices. There is an order block zone and an FVG zone located in this area. Liquidity is positioned on the sell side here, and there is also an order block at the 49,472 level, which the price could reach the first order block zone if a reversal is identified. From this bearish position, we can use it as a pullback for a buy position. But if the momentum increases and the price moves downward, the next support zone is at the 49,301 level. Wishing you success and profitable trades.